Now, one thing to keep in mind with this is that this is not about one new technology. This is about a cluster of technologies that come together to give us a new set of building blocks to build things that we can't even imagine today. Humans are no good at imagining the future because all we can do is imagine a better version of what we have. But when we get the new sets of building blocks, we build things we can't even understand. Now, in addition to, and now we're going into what I'm calling the sixth revolution. This is the sixth time we've seen this cycle repeat in what I'm calling the decentralized revolution. Now, it's not just that the world completely changes from the technology, which of course it does, but it drives all financial markets. The only place to invest for the last 50 years has been the internet and personal computers and telecom. And before that, it was Ford and GM and GM. Before that, it was oil and it was steel. Each one of these cycles represents a new set of generational wealth. And each one of us right now are sitting at this point where we have the ability to create generational wealth as this cycle unfolds. Now, as I said, each one of these cycles that's happened 5 times store of value. Now, in this store of value phase, we see this today. Lots of wealthy people store their value in collectibles, fine art, old cars, paintings, Pokemon cards, baseball cards, whatever that may be. Now, if some of these store of value assets have the right qualities, most of them don't, to be money, then it could potentially evolve to the next stage of medium exchange. Now, it has to be portable, divisible, durable, recognizable, etc. A Mona Lisa could not make a medium exchange because, of course, you can't divide it. A cow could be divided, but it's not fungible parts for parts. So if we have the right attributes, we can go to the medium exchange. And then ultimately, if we've met all of these levels, we could go to the unit of account. So this overlays perfectly with technology. So we're witnessing all of this at one time. So let's just break down. Let's jump into the past real quick. Let's just recap where we're at. Phase 1, which is eruption. This is from 2010 to 2020. We're going to go pretty in 2010. These on the left are store of value assets. Jeff Booth was up here earlier showing store of value assets. So these are assets that we store our wealth in, obviously. Real estate, gold, collectibles, equities, real estate. Now, if we go back, gold was only a $5 trillion asset in 2010. By 2020, it was $11.5 trillion. Real estate was about $180 trillion. By 2020, it was $326 trillion, growing at a 6% ARR. Now, during this time, all store of value assets went up by about 8%. ARR, Bitcoin went up 4,426%. It was an amazing time to be in Bitcoin. During that time, we can see that Bitcoin went from about 30 cents for a Bitcoin to $28,000. Again, an ARR of 4,426%. Now, during this time, Bitcoin, by 2020, took about 0% of store of value assets. Not even a blip, not even a drop in the bucket. So, for example, in the 1800s, the entire world decided to go to a gold standard. Some parts of the world, like China, didn't want the gold standard. They had silver. They wanted to stay with silver, and they lost their position as a world leader. We saw the 1950s, the race for space. We saw the race for nuclear weapons. When nations start competing, things really take off. So we have a precedent for where this is going. But why? Why are the institutions FOMOing in, racing into a new asset? Well, because they see what we all should see. They see that there is no end to the monetary debasement that's coming. And they're all looking for a way to protect themselves. What we have right here is that we can see the bottom right is the U.S. Federal Reserve's balance sheet, which has been expanding by 13%. It's going to be worth $1 million or $5 million or $20 million. Well, the dollar's worthless, right? At that point, the dollar doesn't buy anything. No, that's absolutely not right. You see, Bitcoin is disrupting other assets. I have a venture fund called the Bitcoin Opportunity Fund. As a venture investor, we look at a disruptive technology, we look at the size of the markets it's disrupting, and then we speculate as to what percentage we think we could take from those other markets. So Bitcoin is taking from bonds, it's taking from real estate, it's taking from equities. The dollar doesn't have to die. Sure, gas goes from $4 to $8. It doesn't mean it goes to zero. Now, is that realistic to get 1%? Well, we can look at other disruptive technologies like Uber or Airbnb. Both of them were able to capture 10% of their market in less than 10 years. 1.5% is extremely conservative. All right, now let's start going into the future, and I'm running out of time, so I'm going to start talking even faster. All right, now we're getting into what's called the deployment phase. This is 2030 and out. If you just so happen to get some change and you found a pre-65 quarter and dime, you would not spend it. Why? Because a quarter now is worth $4, but you'd only get 25 cents for it. The bad money, the worthless quarters and dimes, have driven out the good ones. You wouldn't spend those. And so it's a perfect illustration. Now, why would we then use Bitcoin as a medium of exchange? Well, we would only use Bitcoin as a medium of exchange if it could do something that the existing money, the fiat system, could not be used for. Now, we can use this as another example. Gold collectors buy bags of what's called junk silver. They buy bags of these pre-65 quarters and dimes. Why do they buy them instead of bars? Because they believe that at some point the fiat system crashes and they're going to need the quarters and dimes in small denominations to barter with. They believe in a world where supply is expanding more than that. Bitcoin is going to be at least doing 30%, which takes it from 21 trillion to 300 trillion, or puts it at about a $14 million price per Bitcoin. Now, by then, Bitcoin would be worth, like I said, 14 million. It's going to dominate the global store of asset value stage. And if we look at this visually, we can see that it's now taken over collectibles and gold, and it's now catching up to the money supply. Still a little bit behind equities, but it's catching on quick. My time's up. Can I get a couple more minutes to go through a few more slides? Okay. You guys want to see where we're at in 2050? All right. I thought I had 30 minutes, but they didn't give me 30. All right. We'll get through these last couple of slides quick. All right, here we are, phase 4. Now, this is the maturity phase. This is covering, again, 2040 to 2050. And this is where Bitcoin evolves beyond just a financial asset. This is where it becomes something even bigger. So let me go back. Actually start to see the reality of AI and robotics and energy all working together to reduce the cost and expand access, creating massive amounts of abundance. Now, this is in a Bitcoin-denominated world. As Jeff Booth laid out earlier, this cannot happen in a fiat world. The systems are incompatible. The only way we achieve this is with Bitcoin, and of course, everybody wants this. Now, in this phase, the maturity phase, I'm predicting, again, using what the Congressional Budget Office has shown us through 2054, that the money printing continues. Global store of assets have gone from $3.5 quadrillion to $8.5 quadrillion, which sounds absolutely crazy, but again, my parents bought a home for $40,000. I mean, that's how crazy this world is. Now, money is still there, bonds are still there, real estate, equities, collectibles, gold, all of those things are. Now, at that point, this is going to sound crazy, but hopefully I've built this foundation for you. At that point, we're talking $8.5 trillion of global store of value assets. Just using the Fed's CBO or the CBO's projections of money printing and a basic historical growth rate, $8.5 quadrillion. If any of you are good at math, divide that by 21 million, and that puts Bitcoin to about $400 million per Bitcoin. And again, this is not speculation. This isn't a dream. This is the 6th time we've seen this exact pattern play out over the last 300 years in an exact repeating process. Over the 50 years, just like the Industrial Revolution, steam engines, the rail, still electricity, automobile, oil, telecom, and now the decentralized revolution, we see it repeating the same time.